been active on this topic for many years, and I would say 30 years already. So we ask questions about biodiversity during AGMs, and it's also an important topic in our benchmarks on responsible investments. And we do collective engagements on mining and plastics, topics that are closely related to biodiversity. From next year on, we can add a corporate benchmark on biodiversity to this list. So we have developed this benchmark in collaboration with PwC in the Netherlands, who also support this webinar, so for which we want to thank them. And for now, some practical matters. The webinar will last approximately 1 hour. And if you have any questions during the presentation, please feel free to drop them in the chat. So this webinar is being recorded and we will share the recording with you afterwards. So now we are very happy to introduce the speakers of today. So let's take a quick look at today's program. First, we will hear from Maxime Eiselin of IUCN Netherlands, who will provide insights into the fundamentals of biodiversity and its relevance for businesses. And then Thijs IJsbrandij from PwC will share a market update on biodiversity trends within the business community. And next, Charlotte Manson from BlackRock will present their approach to integrating natural capital and biodiversity into investment portfolios. Finally, our own Manon Koelewijn will end with introducing our new benchmark and sharing some interesting results from the pilot we did this year. Well, I hope you're ready for the first presentation. I'm happy to introduce our first speaker, Maxime Eiselin, Senior Expert in Nature-Based Solutions at IUCN Netherlands. He will tell us more about what biodiversity is exactly and why it matters to businesses.
Yes, thank you very much. Thank you, Angélique. It's an honor to give you a keynote on the fundamentals of biodiversity and its relevance for businesses. So my name is Maxime Eiselin. I'm a senior expert nature-based solutions at IUCN NL, which is the Dutch Committee of the International Union for the Conservation of Nature. I'm an ecologist by background. But first, to start, what is IUCN? IUCN is the largest union for nature conservation in the world. Globally, we are a provider of knowledge, resources, and tools from 20,000 experts specialized in a range of topics related to biodiversity, from nature-based solutions to sustainable business practices, and from marine to forest ecosystems and other ecosystems. Our vision is a just world that values and conserves nature. And our goal is to safeguard nature as the foundation of all life on Earth. But our foundation is under threat, and therefore we pay special attention to areas under pressure and that have high natural value and unique biodiversity. We do this by providing policy advices, implementing field projects, and setting up project funding mechanisms around the globe. We work with the whole of society of actors that manage nature across all business sectors and all levels of government. So this webinar is about biodiversity, but let's kick off with the definition. What is biodiversity? You may have some ideas about it. Biodiversity is basically a whole variety of life forms on Earth, ranging from mammals, birds, reptiles, amphibians, fish, insects, to plants, fungi, algae, and microorganisms. Scientists have tried to estimate the numbers of species and agree that the majority have not yet been described, and the number of species vary between 5 and 30 million on Earth, so that's a big range. However, the concept of biodiversity goes beyond the diversity of a species and includes the variability of genes and of other forms within species, and also the assemblages of plants, animals, and microorganisms, which together constitute whole ecosystems. So the most formal definition of biodiversity comes from the Convention of Biological Diversity of the UN, and they define biodiversity as the variability among living organisms from all sources, including terrestrial, marine, and other aquatic ecosystems and the ecological complexes of which they are part of. And this includes the diversity within species, between species, and of ecosystems. So the definition therefore includes 3 levels of biodiversity, which I listed here. So the genetic variation within individual species, the diversity of species, and the diversity between and within ecosystems and habitats. So here the linkage between species and their habitats is vital. Changing an habitat will usually affect the diversity of species contained within it, while also a change in species number or composition may well affect the nature of the habitat. So there are interlinkages between those. A crucial indicator for the health of the ecosystem is obtained from its wildlife community. So if the loss of wildlife is greater than the long-term evolutionary processes would imply, then this indicates a ecosystem degradation. UNEP has estimated that species extinction rate is now 1,000 times higher than the natural rate. And this is very worrisome, and this is largely the decline of, and this decline is the result of human activity, and represents a serious threat to human and economic development as well. So that's some theory of what is biodiversity. But why is it important for businesses and everyone in society? Well, it's because it's literally our foundation. Our stock and flow of ecosystem services depend on the genes, the species, and the populations. For instance, biological resources feed and clothe us and provide housing, they provide medicine, and also have spiritual values. 1/3 of climate mitigation is needed. 1/3 of climate mitigation needed to meet the goals of the Paris Agreement can also be provided by nature-based solutions. So, in other words, without a healthy natural environment, it's impossible to achieve the other SDGs. So there is a problem. Our fabric of life is under serious threat. IPBES estimated that 1 million species are under serious threat, and this number is only increasing. Amphibians are the most endangered animal group, while corals are most rapidly declining due to rising water temperatures. And alarming data such as from the IUCN Red List shows that 44% of warm water corals are now at risk of extinction, so almost half of warm water corals. Also, 1/3 of world tree species could go extinct shortly, according to an IUCN report launched a few weeks ago. And this year's global Living Plant Index shows that there has been a catastrophic 70% decline in the average size of monitored wildlife populations in just 50 years. Currently, man and farm animals represent 94% of all mammal biomass, indicating that there's not so much biomass left by wild species. Furthermore, 85% of wetland area has been lost, and more than 50% of life in the oceans is gone and is dying off at 1% per year. So why is this all happening? Globally, climate change is the largest emerging driver of biodiversity loss, but there are more important drivers. According to the IPBES, we also have loss of habitat for species to live in, the exploitation of natural resources, for instance, timber. We have pollution, invasive species, and these are the main categories of drivers of biodiversity loss. And over the next 20 years, due to these drivers, there's a high likelihood for a trophic cascade collapse, and then everything comes down. So often climate and biodiversity are labeled as two things of the same coin. So those among you that have read the climate book by Greta Thunberg will recognize the first design on the left. The warming stripes show how the Earth's average temperature is increasing. So blue is cold, red is warm. And the biodiversity stripes on the right do the same for species. Gray means more species went extinct. And as you can see, as global temperatures rise, species become increasingly extinct. So why does this all matter to biodiversity? Why does this matter to the private sector? Well, in recent years, things have changed. Biodiversity is getting higher and higher on the business agenda. But why is this? Well, I think there are a few trends that we need to take into account. First and foremost, there's new public policy, especially in the EU, originating from the Green Deal. We have the Green Taxonomy, the CSRD, and the CSDDD. They may be familiar to you. We also have the Global Biodiversity Framework, which has been adopted in 2022 with business targets number 15 and finance targets number 18 and 19, and with a call to mobilize an additional $700 billion from both public and private sources for biodiversity. We also have new reporting and measurement standards. Many more are coming out. You may know the Task Force on Nature-Related Financial Disclosures. There's also the GRI standard for biodiversity. We have science-based targets for nature. We also have the third point, more social and business awareness on the biodiversity risks. For instance, through the World Economic Forum Global Risk Report. And more opportunities emerge to invest in bankable nature-based solutions, in particularly around food and water security, disaster risk reduction, and carbon credits. So some of you may have been at COP16 in Colombia, the UN Biodiversity Summit. And there were a record number of businesses available. So out of the 24,000 registered delegates, 6,000 were businesses. So 1 out of 4. This indicates a big attention of business for biodiversity. So solutions, what can you do? Well, the time is now to anticipate and come into action. Biodiversity loss is increasing, and laws and regulations are emerging. Harmful subsidies will be redirected or stopped, and we have a lot of good consultants who are ready to provide advice. And there are tools available, guidance available on what to do. There's sufficient scientific knowledge. But what I would advise is to first and foremost set a biodiversity target for your organization. Nature-related commitments remain low, as you can see in the image. Among companies that have nature-related targets, most are only considering one dimension of nature, most often climate. And after setting a target, it's important to assess how you aim to achieve it. And here strategies are important. So what strategies can you adopt? I think there are three which are applied a lot currently. The first one is to apply the mitigation hierarchy to go nature positive. Second one is to adopt a natural capital approach to account for the stocks of natural capital as well as the flows of benefits. And thirdly, science-based targets for nature, looking at the ecological boundaries in which you can source and operate. So this is what you can do. I hope that this is all clear, and if you want to have more information also on the strategies or more information on biodiversity in general, please don't hesitate to contact us. Thank you very much.
So thank you, Maxime, for setting the scene and for the introduction on biodiversity. I don't see a question in the chat right now, so maybe we keep this for later. So we just continue, but thanks a lot. And I think we move on to a market update from PwC, presented by Thijs IJsbrandij. Thijs leads the nature strategy team at PwC Netherlands and is deeply involved in helping businesses navigate the complexities of biodiversity and nature reporting. Well, he will share key developments and challenges in the business community's approach to biodiversity. So I think you're ready, Thijs.
Yes, Angélique, thank you. And thanks everyone for joining the webinar. Very nice introduction also from Maxime. My intention is to provide you with a small update on what we see happening in the market in response to some of the trends that Maxime just highlighted. So of course we see some concerning developments with regards to the state of biodiversity, but how is the business community now responding in practice? And I think one update that Maxime already shared with regards to the business participation in COP16, we also really recognize. So we really see that attention on biodiversity is growing rapidly. So for example, TNFD, already mentioned by Maxime, has been launched only in January and already has over 500 companies that have pledged to now adopt the framework and start reporting. The Finance for Biodiversity pledge is a bit older, but also there you still see the number of signatories really increasing over the years. And simultaneously, the number of scientific publications that we see on topics related to biodiversity, here's an example for ecosystem services, is also really increasing. So we have more and more knowledge on which we can base the strategies and targets that are so important to halt and reverse biodiversity loss. Simultaneously, although this attention is growing, we see some hesitation, especially in the Dutch market, on really moving forward and engaging with the topic. The chart on the left side of this slide is from PwC's CSRD survey that we conducted earlier this year. And we asked companies to what extent they intend to start reporting on the different environmental standards that are included in the CSRD. And we see quite a similar response for the Netherlands versus global when it comes to climate and circularity. However, when you look at the E2, E3, and E4 standards, so pollution, water, and biodiversity, we really see that the respondents within the global data set are much more preparing to also report on these, let's say, newer environmental standards than we see in the Netherlands. And some of the common challenges that we see happening with clients when we speak to them about an observation like this is that they are really struggling with priority overload. So they say there's so much coming our way, so much regulation. We already have our climate strategy. So how do we now add other topics to that? That is really a big challenge. Then there's the concept that with regards to biodiversity, there's not, like with climate, the greenhouse gas protocol that many of you will know, one standard accepted and adopted measurement framework. So I think there's no shortage of options. So there are lots of different measurement frameworks available, but there's not one that everyone is consistently applying. So that is a challenge that we really hear a lot. And then there's also a certain degree of uncertainty about what to do after the topic is put on the agenda. So of course you can assess your impact, you can assess your dependency, but then people say, well, then we add, let's say, another problem to the to-do list. And if we cannot then create an effective strategy to take action on some of the things that we identify, then that is not a very appealing thing to look forward to. So these are a few challenges that we see happening in the market. And I think these challenges are also really reflected in, well, the current maturity of the topic within the business community. Maxime already shared a chart on the likelihood of businesses setting targets on nature. And I think some of these observations are also echoed by a benchmark that was published by the World Benchmarking Alliance, in which you see that the best scoring company out of a max score of 100 only scored 55. So that is, not a super high score, of course. But the more shocking news, I think, is in the bottom, where you see that there's really hundreds of companies that score less than 30 points. So actually, the majority of companies achieved only very low scores on this nature benchmark. Simultaneously, it's of course interesting to then look at the way that the top scorers are approaching the topic. And I think the case that we can explore from Caring is actually quite interesting. So I've highlighted a few aspects of their approach. Caring is an interesting example because it's actually the first company that managed to set both water and land science-based targets for nature. So many of you will know the Science-Based Targets Initiative, where you can set greenhouse gas emission reduction targets. But as of this year, there's also the option to set science-based targets on land use change, and also on water use and water pollution. So this is a really new development, very interesting piece of methodology that was developed around it. And what we see with Caring's approach are a number of interesting things that I hope will also help you take some of your first steps. So indeed, we see that there's not a single metric by which you can capture everything that has to do with biodiversity. We also saw Maxime's presentation. There are different impacts that cause biodiversity loss. So as such, we need to consider a group of metrics to understand the impact on nature. And the number of key metrics to consider are, for example, land use, water consumption, pollution, nitrogen and phosphorus, and also greenhouse gas emissions. So yes, it's not one metric, but it's also not hundreds of metrics that you need to measure. If you do, for example, this set of metrics, you really will already be able to take a very good start on assessing your impact on nature. Then secondly, we see that Caring is applying the mitigation hierarchy in their approach. This is one of the strategies that was already mentioned also by Maxime. So this means that in structuring your targets, but also your actions, you should first try to avoid impact, then reduce impact, and then restore impacts that you really cannot avoid anymore. So within their land targets, for example, we see that they aim to be 100% deforestation and conversion free in terms of their leather production by 2027. So this is an example of avoiding, but they also want to reduce their land footprint by 3%, and then they want to deploy regenerative agriculture. So this is really an example where you see that they apply these different elements of the mitigation hierarchy. Next, we see that the metrics that they use need to be contextualized because the impact differs per location. This is different from what you will know from greenhouse gas emissions, where impacts distribute equally across the atmosphere. You can imagine that if you use land or if you use water, it matters on which location you have that impact. So what you see is that they speak about the land footprint, but actually this land footprint is built up out of different components. So there's the area in hectares, but also then the intensity of land use. So how much natural habitat is retained on land that is used for the production of carrying's raw materials. And then they also consider the importance of ecosystems. You can imagine if you use land in the proximity to a protected natural area, then that is more significant than if that is not the case. So metrics need to be contextualized. And then finally, an interesting observation from carrying's approach is that they really approach the topic one step, or actually location at a time. So you see that their water target was based on the Arno River Basin, which is in the area of Florence. So they are not trying to address immediately global water consumption, but they really have taken one of the top priority locations and focused their target setting there. And I think this is also something that you can consider in further shaping your biodiversity approach. You don't need to do everything at once. The topic is complex. So if you do it one step at a time, that makes it more manageable. That was what I wanted to share. So I think I will hand over back to Angélique so she can introduce the next speaker. Thanks, everyone.
Thanks a lot, Thijs, for your interesting update on behalf of businesses and biodiversity. And it's time to move on to the investor's perspective, I think. So you're right. We are more than happy to welcome Charlotte Manson. She is Head of Sustainable and Transition Solutions for the Nordics and the Netherlands at BlackRock. So Charlotte will share BlackRock's perspective on integrating natural capital and biodiversity into investment portfolios. So may I ask you to introduce yourself, Charlotte, and give your presentation. Thanks.
Thank you very much, Angélique, and thank you for having me here today. I think it's a testament to the importance of this topic that we have almost 130 attendees on this webinar. So, and I saw a lot of familiar names from the investment industry as well. So I think that is really a confirmation that it has risen in importance. So why has it risen in importance? Why is natural capital and biodiversity suddenly really entering the spotlight? And I would say it's over the last 18 months, 2 years or so. Well, a number of reasons. One is that we are now able to quantify the impact of the economic loss due to natural capital deterioration. And what that means is that it is we're able to measure the impact on investment portfolios, on companies' P&L, and so forth. So what we have seen is that forestry, agriculture, and marine systems are under increasing pressure, and they're heavily impacted. 23% of global land surface has been degraded. More than 30% of global fish stocks have been over-harvested as well. So this degradation is becoming financially material. More than 50% of global GDP is dependent on biodiversity or nature to some extent. And a continued decline in ecosystem services are estimated to cost the global economy almost $3 trillion annually by 2030, or that's more than 2% of global GDP. And just to put that into context, during COVID in 2020, GDP contracted with just over 3%. So imagine a scenario where this is going to be the case year after year. So we're able to quantify more. We're seeing that it is really impacting global GDP, and the outlooks are very concerning for the future as well. So what does that mean for investors? Well, I mentioned that it is definitely a topic that we are speaking to investors more and more about over the past 2 years or so. We've seen that surveys are showing that more than 80% of investors are ranking it as a key concern. They're really trying to better understand, first of all, what is the impact on their portfolios, but also what is the dependency of their portfolios on nature and on biodiversity as well. So we work with a number of investor clients, a number of the Dutch investors as well, that are really now trying to, first of all, monitor those impact and dependencies, and then trying to develop policies around, it could be setting some targets that, for example, Maxime talked about as well, wanting to avoid certain sectors and so forth. So what we've also seen is that during COP16, there was quite a large number of investors that attended, and BlackRock had a delegation there. We were about 8 colleagues that went to COP, and we saw many other investors. Some of those key takeaways for the investor community was that biodiversity and natural capital is still a very complex area topic. It's much more complex than climate, and that in part has to do with the complexity and really the scarcity of data. But it is also still quite a small investable universe. So I think where investors are wanting to lean into the topic and are wanting to identify some of those opportunities and also manage those risks, they're still finding it quite difficult as it is complex, and they're still trying to understand where are those investment opportunities. So let's talk a little bit about what we have seen in the last few years in terms of investments. So today, the primary investor in natural capital is the public sector, and private finance flows are really still very limited. They're estimated to be just around 70 billion annually, and that's a very small fraction of private markets, which exceed about 10 trillion in value. And it's an even smaller fraction of global equity or fixed income investments, which exceed more than 100 trillion annually. So it's a really small flow that's going to natural capital theme investments. And what we've seen is that a large majority of those investments are going to investment products and funds with sub-themes. So this could be water, agriculture, forestry, circular economy. And actually only 3% of the 70 billion go to funds that have a biodiversity or natural capital label. So it's still quite limited. What we have seen, though, is that an increasing number of impact-oriented investors are starting to focus on natural capital as it aims to achieve real-world outcome and impact as well. So as that increases in importance for that subset of investors, we're seeing a spillover effect into other investor and investment categories as well. So I think flows started to increase in 22 because there was a real momentum that was building up, but they've slowed down again over the last 2 years as there has been more work has been done really on trying to understand what are the investment opportunities, what is the actual investment universe as well. So, but there are some positive signs. We're seeing a lot of innovation taking place across the investment value chain. And we've identified 4 key areas where innovation is already taking place and where there are opportunities for investors. So the first area is in technological advances. So a lot of startups are applying emerging technologies like sensors or satellite imagery and AI. And that's really creating a very vibrant nature tech ecosystem that presents opportunities in startups globally. Secondly, we're also seeing a growing number of different financial instruments. So, for example, there's an emerging market for biodiversity credits. There's also a growing number of biodiversity bonds. And so these new types of investment and financial instruments are appealing to a greater number of potential investors. The third area is around business models. So the World Economic Forum has identified more than 60 big business models in a nature positive economy that could be worth more than $10 trillion annually by 2030. And these are opportunities that offer business models that have comparable or better returns than business as usual business models, and in addition to reversing nature laws. So, and this is really about companies being much more efficient in the way that they're using natural capital, and also in the way that they are limiting the harm on natural capital. And then there's a large number of new investors. I mentioned impact investors already, And we're seeing that there's an increasing interest from institutional investors, so in particular asset owners, that are looking to allocate towards this as well. So I think, these 4 signs are quite positive, and we would expect more flows to go towards natural capital in the coming years. So then just a little bit about BlackRock and how we view natural capital. I mentioned it's a topic that we have focused on for the last couple of years. We really started out very much in the research space, wanting to understand what is the data that's available. We did a large assessment of more than 14 external data providers to see, what are the kind of metrics that are available, what are the kind of company universes that it covers, and what is the complexity of some of these data needs as well. We've then started to move into the investment thesis, really, and to understand, well, again, where are those opportunities? And we believe that the economy depends on natural resources, but really only a portion of natural capital's value is priced into markets today. And so we don't think that the markets are fully capturing the value, especially where resources are shared rather than owned. So, for example, we say often that the bees should really send invoices because pollination accounts for almost $500 billion annually. And without pollination, more than 80% of global crops would be heavily impacted. Doesn't mean that they will be destroyed, but it means that something else will have to replace bees. And there is a lot of startups that are focusing on small bee robots, for example, that can do this kind of pollination, but that's also very costly. So, in the instances where these natural resources are shared, it could also be water, for example, they are not managed efficiently. And our thesis is that with this increasing pressure and strain on natural capital and these increasing costs, that will change the price of assets. And we're seeing that a number of drivers are really pushing up those costs. Policy, it was already mentioned by the speakers before me. A lot of new regulation is coming in on deforestation, on nature preservation, and so forth. COP16 will most likely result in a number of national legislation as well. So policy is pushing. In the Netherlands, you have the Dutch National Bank, which of course is also issuing guidance and risk assessment frameworks as well. Technology, so this is really about changing the way that nature is used and also consumed. So biosynthetics is a really interesting new area that will enable us to preserve the longevity of natural capital, but also will enable us to replace the reliance on natural capital and instead using synthetics. And then preferences. Not only consumers like you and I are starting to look more at the origination of certain goods, but investors are also starting to look at the dependency and the impact of the investments that they hold. So we believe that repricing will take place. We're already starting to see it in some industries, food and beverage, for example, and that will continue. And that is one of the key reasons why investors should really be focusing on the natural capital risks in their investment portfolios. So, here's just an example. What the chart here shows us is that companies that are operating in either low stress or high stress regions, so this is in terms of water stress, those that are operating in stressful regions and have a higher efficiency of how they manage their water usage, they have a higher return on those assets. Whereas if you have a low efficiency on your water intensity, there's a lower return on those assets. So again, it's really to illustrate that it's having an impact on the return on your assets and on your investment portfolios. So again, we see that policy drivers will continue to push up prices, and it'll continue to have a real impact on investment portfolios. If you are a corporate that is heavily reliant and dependent on certain natural resources, and you are suddenly faced with a number of tariffs or taxes, it could be or it could be certain restrictions on water usage, for example, that's going to impact the cost of your production, and that's going to impact the cost of the goods as well. So policy is a driver that we are watching very closely. So what are investors doing? Well, a number of things. The first is really about monitoring and managing. And here again, it's getting that overview of the impact and dependencies of your portfolio. And we see a lot of investors are starting to use the Encore framework, which is able to really map those dependencies and those risks as well. And that's the first starting point, really to get an overview of, well, where is your portfolio at? Where are those risks that you're exposed to? And then you can start to manage those risks. And here there are a number of different tools as well. You have exclusion. Some investors choose to avoid certain high-risk sectors, extractive sector, for example. But it could also be that they're choosing to lean into other sectors as well. Many investors are starting to focus on nature-related considerations and really integrating them. So that's very dependent on the data availability and really understanding a company's management of certain natural capital risks. And then there's engagement stewardship, so really focusing on greater disclosures. Our investment stewardship team has been focusing on natural capital for several years. And here we're seeking greater disclosures. We're seeking TNFD reporting. We're looking to understand if the company has made a risk assessment on its dependencies of natural capital and its impacts as well. And then lastly, investors are also choosing to focus on thematic funds, for example, water or forestry, or circular economy and so forth. So these are some of the tools that investors can use to really lean into the topic. And I think I want to close on a relatively optimistic note. I think it is becoming increasingly clear to corporates and to investors that the cost of natural capital loss is financially material, and it's significant and it's growing as well. However, we're also seeing that that nature-related technology is innovating at an unprecedented pace, and with corporates sitting up and taking notice, with investors understanding that it's impacting their returns in their portfolios, and policymakers putting it on the agenda as well, I think we're starting to see some positive signs that that these different stakeholder groups are starting to prioritize natural capital. And with that, I will hand it back to Angélique.
Thank you for your presentation, Charlotte. Very clear, and for giving us the investor's perspective on biodiversity. And I think, yes, we have to move on, but it's time for a closer look at the new biodiversity benchmark. It is developed by VBDO and PwC, and Manon Koelewijn, she is project manager at VBDO. She will introduce the benchmark and present some initial findings of our pilot we did last year. So please.
Yes, thank you very much, Angélique. Also, thank you to all the speakers for setting the scene of today, how companies and investors are already interacting with the topic of biodiversity. And I definitely hope that today you will close your laptop having been inspired by all of the speakers to understand more about how this market is responding to biodiversity, but also the importance of addressing the topic through and within your own organization. I will be explaining more indeed, as Angélique already said, about the context of our benchmark and also some of the initial results from our pilot phase. As we heard, biodiversity is in many ways a very important topic. And it is also a topic that we at VBDO have been working on for quite a long time. Especially the introduction of EU regulations such as the CSRD once again highlight the importance of this topic, that it is relevant as ever to speak about biodiversity. But what we've also seen over the years is that although companies and investors are showing awareness of the issues, like Charlotte already said, it can be very difficult to actually turn this awareness into a course of action and to understand what an approach towards biodiversity should look like. Therefore, this benchmark is also part of a broader toolbox, as it is meant to guide companies and investors towards sustainable approach with regard to biodiversity. We also address these topics with pension funds, Dutch pension funds, and insurers. Benchmarking is also not new to VBDO. In fact, from the top of my head, this is the 4th benchmark that we are doing. So we have a benchmark for tax transparency, which looks at European and Dutch listed companies. Then we have a Dutch health insurer benchmark on responsible investment, and also a responsible investment benchmark for the pension funds. Actually, last week we presented the results of this year's pension fund benchmark, and actually we were pleased to find that Dutch pension funds are actually also paying more attention to the topic of biodiversity when they are investing. So the purpose specifically of the biodiversity and business benchmark is that we want to increase both the practices and the transparency of Dutch and European listed companies on biodiversity. So the benchmark is addressed to companies. They will be assessed. This will be a yearly assessment, which also allows us to compare the developments over time and see where companies are maybe still struggling, share good practices, and through that encourage them to do more on the topic. And of course, it is very important that this also aligns with existing frameworks. So it is aligned with the Global Biodiversity Framework. We've taken in consideration the CSDDD, CSRD, other European guidelines such as the EUDR, the Deforestation Regulation, that is. We've looked at a variety of frameworks and relevant existing biodiversity standards. We've also had a consultation with a variety of stakeholders, NGOs, governments, and businesses as well, also to make sure that it is aligning to what is also already out there. For the scope, we have conducted a pilot this last year with 14 companies in scope. And next year we will broaden this to include 30 companies. This is across 3 different sectors. So that's extractives, food and beverage, and pharmaceuticals. And these sectors are chosen because of their high impact on biodiversity, but also in the case of pharmaceuticals, their large dependency on biodiversity for their business. So this is our initial scope. And this might also change in the future, be more elaborate, and this might also not be an exhaustive list that is subject to change, but it gives you a little bit of insight in the types of companies that we will do this assessment on. The process of our benchmark is as follows. First, we start internally with an assessment of the company, which we do based on publicly disclosed information. But after that, we also want to give the company the opportunity that perhaps if they have any internal relevant data or information available, that they can also provide their input and their feedback, after which a second assessment will establish the final scoring. And this will be published and provide a ranking of how well the companies are performing. For the pilots, we have not included the feedback of the companies. So therefore, the results that I will be presenting today will also remain anonymized and will be the general results that we have found. The structure of the benchmark is, in a sense, shaped like a funnel. So it starts broadly at the top, starting at the strategy and business model, and moving all the way from policy to actions and implementations, and the nitty-gritty targets and metrics. The exact methodology and methods will be further explained to the companies that are in scope, and also when we publish the benchmark next year. So for now, I will keep it quite brief, but these are the 4 categories that we address. Now I will also provide a brief overview of the indicators that are included for each of the categories and also present the initial outcomes that we've seen. So when we are speaking to companies on strategy and business model, they can score 28 out of 194 points. And we want them to address some of the following aspects. So first, we look at their materiality analysis, if biodiversity is a material topic to them, and also how that relates to each of the 5 biodiversity loss drivers, which were also mentioned earlier by Maxime. These are land and sea use change, overexploitation, climate change, pollution, and the introduction of invasive species. So furthermore, we expect the company to do assessments of the risks and impacts and dependencies, and also identify opportunities when it comes to biodiversity, and we hope that they also discuss this at a board level. We want companies to be aware of location-specific impacts, as was also mentioned earlier. It comes down to very location-specific changes. In line with CSRD and CSDDD, we expect the company to present a transition plan. And we also want to know how they are consulting affected stakeholders and holders of indigenous and local knowledge. These are among some of the indicators that we have within this category, and we already saw that a double materiality analysis, like we know it under CSRD, is not yet common practice for companies. This was also quite a low scoring category, but we are expecting companies to perform better in this regard in the following years as European legislation will also roll out. So here you see an overview by color, the ranking of the 14 companies that were in our pilots, and it is indicated in which sector they are present. And we see that here at the top, food and beverage companies are scoring relatively better than, for example, the pharmaceuticals. So then moving on to policies. This category has 76 points, and some of the indicators that we address here are describing how the company seeks to address impacts following the mitigation hierarchy, which we also discussed earlier. So whether the policy is aimed at avoiding, minimizing, or rehabilitating and restoring impacts. Each question in this category aligns with one of the biodiversity loss drivers, and here companies can score double the points if these policies also apply to their value chains, so that they are extending this beyond their own operations, which we feel is very important, that if we are speaking of biodiversity, that most impact is not necessarily in the own operations, but farther away and further tiers in the supply chain. This category also has a 6th question, which also asks companies to elaborate on how and if they are addressing any potential social consequences of biodiversity. Here you can see again the list of how the sectors are performing currently. It must be noted, I forgot to say, that because the feedback of the companies was not included, it is also very much possible that next year companies will be scoring higher in these categories, as then they might have disclosed any internal documentation or information which can provide hopefully some higher scores. What stood out was that many of the documents addressing any of the biodiversity loss drivers are not integrated in an official policy, which is signed off by a CEO or management, but they were mainly some highlights in the annual reports or maybe a web page. And definitely in the years coming, we are really looking that a company integrates these points in an actual policy. Moving on to actions and implementations. Here again, we follow the structure of the biodiversity loss drivers, and we ask companies to disclose what actions they undertake, and we want them to be time and location specific. We want them to address the potential impacts that the action has, how they have included their stakeholders, and how this contributes to system-wide change, which is also what stood out. We've been seeing a lot of actions and implementations that seem a little bit of a one-time off initiative, and over the years we are hoping to see how companies are perhaps engaging in actions that are looking for a structural and systematic approach, and that we can identify what that might look like. Again, the food and beverage here is leading in the scoring. And then moving on to the last category, which is the targets and metrics. This was actually the best category when it comes to the points that the companies have scored. It was a high scoring category, which is also very interesting to see how they are addressing biodiversity in their targets. However, we really hope to see that it will be something that is happening throughout the company and not only on a targets and metrics level. So in this category, we have 10 indicators, which include that the target is based on the relevant frameworks, such as the Global Biodiversity Framework or existing initiatives, that it is specific to which part of the value chain it applies, that it includes a time frame, the metrics are disclosed, and that there is progress data available. Also, we are asking for externally provided reasonable assurance, which is not yet common practice, but we hope that that will also be the case in the future. And then I want to highlight some important findings. What was already mentioned also in earlier presentations is that we see a high maturity when it comes to addressing climate change, which I think also gives a lot of potential to also develop and mature on the other biodiversity loss drivers that we are seeing. And that we also see the beginning of the identification of location-specific impacts on biodiversity-sensitive areas. We see some companies that are aware of material sites where which are biodiversity-sensitive areas and how their operations are impacting that area. And we hope that will be the start of more companies doing that as well. Very slowly, companies are also starting to understand that a topic such as biodiversity is not a standalone topic, and that there are actually many social consequences that also come from the fact of biodiversity loss and ecosystem-related impacts. So a couple of companies, we were very happy to find that they specifically address this in their annual reports, and we also hope to see more of that in the future. And what I think already became quite clear from the rankings that were provided is that food and beverage is currently the highest scoring sector from the sectors that we are including in this benchmark. And in that sense, pharmaceuticals still have the most room for improvement. When we are looking at future activities for this benchmark, early next year, we will publish a 2-pager on the benchmark outcomes, which will also touch a little bit more upon the methodology. And we will have the rollout of the actual benchmark with the 30 companies that are now in scope. So the first assessments will start when the annual reports are published, and that will be early spring. And then the publication of the results, you can expect them Q4 of 2025. So yeah, as we have seen, biodiversity is really an all-encompassing issue, and we should definitely sooner rather than later address the topics. And we are convinced that businesses have a great opportunity to do their part in that sense. I hope you have all learned something today about how you can address biodiversity from your background in your business or as an investor, and that we can engage in a productive dialogue on this very important topic. In the meantime, I want to encourage you to not stand still, but to have a dialogue with your peers and to learn from good practices of others. So also engage with stakeholders outside, maybe your usual stakeholders. So also consult with NGOs and experts and definitely local communities on how to address biodiversity. So I want to thank you all very much for your time. On behalf of VBDO, I would like to thank all of the speakers for sharing their compelling presentations. Before we wrap up, I would like to remind everyone that today's session has been recorded and will be shared through email and on our website. And if you have any additional questions or you want to learn more about the topic, please don't hesitate to reach out to any of the speakers or to us at VBDO. You can see our contact information here. And I definitely want to say that biodiversity is an urgent and complex topic, but as we've seen today, it also presents incredible opportunity for business and investors and many other stakeholders to contribute to a sustainable future. So I want to thank you all for joining us and hope to see you at future VBDO events. And I wish you all a great afternoon.
Thanks a lot. Bye-bye.